Hello everyone. This is the pre-market report video for today, 11th August 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quick takeaway from what happened last week. If required, please pause and have a look. Because of Trump 50% tariff on Indian goods, last week for the 6th straight week, Nifty closed negative. Last time Nifty closed negative for the 6th straight week was during COVID period, on April 2020. After that 5 long years, now this Trump drama pushing the Nifty down. On Monday, Nifty had the short covering. Then on Thursday, because of weekly expiry and Russian President Putin and Trump meeting optimism, made those 2 days alone to close positive, whereas all other 3 sessions, Nifty closed negative. Sector-wise, on weekly basis, PSU Bank managed to increase 1.6%, and in addition, metal and auto sector managed to close positive, whereas all other sectors closed negative, particularly pharma, FMCG and healthcare down over 2%. About institution, last week FII net sold for 10,650 crore rupees, and on Friday, surprisingly, after 14 sessions of net selling, FII turned as net buyers and they net bought for near 2,000 crore rupees. Whereas about DII, they were mega net buyers in all the sessions, and for the whole week they net bought for 33,600 crore rupees. And last Friday alone, DII net bought for 7,700 crore rupees. Hence, FII and DII together last Friday net bought the Indian stocks for 9,700 crore rupees. Despite this heavy buying by both the institution, last Friday Nifty was down over 250 points. In case of participant-wise open interest, after the weekly expiry in one single session, last Friday 70% new call options and 13% new put options were added. So, open interest were fairly matured and it added more than what expired last week. And participant stance-wise, in the index options, client or retail traders was super positive. They are holding like net near 18% of their open interest on the bullish side. On the other hand, FII and proprietary traders holding net 10% and net 7% of their open interest respectively on the bearish position. Then in the index futures, FII holding 92% of their open interest on the short side, whereas client having 70% of the open interest on the long side, and similarly proprietary traders having 60% of their open interest on the long side. Here I believe proprietary traders holding the long side as a hedge for their options negativity, while FII was double down negative both in index options as well as in index futures. Hence, considering all, both FII and proprietary traders makes more money if market expires negative, and both of them were net call option sellers and net put option buyers, meaning they are expecting the range bound on the upside and breakdown on the downside. Whereas client or retail traders makes more money if market expires on the upside. Here they were net call buyers and net put sellers, considering that they are expecting range bound on the downside and breakout on the upside. So those were the quick takeaway from the last week Indian market. Then coming to US market, Trump nominated one of his favorite as the Fed Reserve Governor, and his name is Stephen Miran, and he often aligns with Trump previously and suggested for more rate cut. Hence, now this increases the optimism for the rate cut in the upcoming next FOMC meeting. Hence, US market closed on the positive note and Nasdaq attains the new all-time high value. So, Dow Jones was up by 0.47%, S&P 500 increased 0.78% and Nasdaq outperformed all and increased near 1%. In case of VIX, it decreased 8.5% and moved closer to 15 from around 16.5. However, there is no major change in the oil. WTI crude traded near 64 US dollars per barrel and Brent crude traded around 66.5 US dollars per barrel. Regarding Indian ADR, as it is, ICICI Bank and Wipro closed flat. Infosys was mild negative, whereas HDFC Bank and Reliance GDR was down over 1%. However, last Friday itself in Indian market, those stocks were equally down, so no major fresh negative. Hence, if we calculate the arbitrage and adjusting with dollar premium, both the IT stocks indicating the flat to negative bias, whereas both banks indicating flat with positive bias. In line with that, early morning on Saturday, Gift Nifty closed at 24,434. Equating that with the spot market, it's also indicating the flat opening. As a summary, there is no fresh indication of neither negative nor positive. I mean, this US rate cut optimism is positive for global momentum, but tomorrow US government is going to release the July month inflation, which analysts during weekend projected it to increase. If that's the case, I mean higher inflation number tomorrow for sure will spoil the rate cut optimism. So we could say global momentum is paused until that time. Whereas regarding Trump and Putin meeting, White House announced that they are going to meet on August 15th, this coming Friday in Alaska. So before the meeting during weekend, there was a report that Putin did spoke with our PM Modi and other BRICS countries chiefs. Hence, there is a chance market might consider this as positive. Let's see, and also maybe at present our market is little oversold now. But we can't say anything for sure in the market as it always irrational. About the things to look out, from macro perspective, there is nothing that I'm aware of is scheduled release today that could affect our market. Coming to technical, Nifty opened 50 points gap down and continued to slide down throughout the day and ended near the day's low. Thus on the daily chart, it formed a long bearish candle with minor upper and lower shadow. On the more negative side, it failed to hold the 100-day exponential moving average. It formed 3 consecutive lower high and lower low formation. RSI value from 41, it dropped to 33. The gap between the MACD line and signal line keeps diverging and it closed below the lower Bollinger Band, all signaling the huge weakness in the market. So 200-day simple moving average is around 24,050 and 200-day exponential moving average is around 24,200. Hence, I believe that zone 24,050 to 24,200 is the important critical support zone. If Nifty failed to hold that level means then there is a high probability for creating the panic selling. Just for info, last time when Nifty broke this 200-day moving average level during Jan and February period, it fell all the way down to 22,000 mark. Anyway, on the upside, 100-day exponential moving average around 24,600 is the immediate resistance. In case of Bank Nifty, it opened 80 points gap up, and like Nifty, it also continued to slide and fell below 55,000 mark, like near 54,900. But the aftermarket hour correction made it to close above 55,000 mark. So it also formed a long bearish candle with minor upper and lower shadow. And if we combine the last 2 candles, then Friday's red candle engulfed the Thursday's green candle, which is a proper bearish indication. On the more negative side, here also it fell below the 100-day exponential moving average and closed below the lower Bollinger Band, but the aftermarket correction made it just inside. Hence, in Bank Nifty case also all indicating the weakness. Here, the 100-day exponential moving average zone 54,950 to 54,850, which I believe is a critical support area. A sustained move below 54,850 could intensify the downtrend. Whereas on the upside, the key resistance area is near 55,700 to 55,800 zone. Then on the weekly options front, the maximum call option open interest was at 25,000 mark, followed by 24,500 and 24,600, with maximum new call option writing at 24,500 strike and then 24,600 and 25,000. On the put side, the maximum open interest was at 24,000 strike, followed by 24,500 and 24,300, with maximum new put option writing at 24,300 strike and then 24,000 and 23,800. Thus, from options data, it suggests that the immediate support is at around 24,300 with further downside support at 24,000 to 23,800, whereas on the upside 24,500 is the key resistance to watch. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.